Hey everyone, it's Marin here, and I just want to kind of give a really important alert. The point of investing is to take as minimal risk for the maximum upside. Today's alert is about going where the puck is, being a true alligator mathematically, controlling your emotion. And today's alert is something that everybody can participate in, whether you're accredited or a non-accredited. And this was a story that we got a lot of emails earlier in the year when they did the IPO. And I said, hey, chill out, relax, you'll be able to get in. And today is specifically why I was so bullish on David and the team here. First of all, I have never seen ever in my career a management team execute with this much precision and time. Secondly, they're going after a royalty on Canada's largest producing mine that's already in operation. Talk about de-risked. So David, we're going to jump into this, and thank you for doing this because I know you're busy. Here you have Canada's largest operating mine. It's called a Malartic. And yet there's this royalty company that had these assets, and it's no secret. Everyone on the street knows that much bigger companies than Gold Royalty have approached the largest shareholders in management to buy it out. And the insiders and the largest shareholders in the management team said, nah, it's okay. But they decided to go with you at $4.80 is what the FX was set up at, right? The currency exchange, the share exchange between it. But what does Rob McEwen, Eric Sprott, Jimmy Lee, who very few people in our market know, and Greg Milan, some of the smartest and richest players in the gold market know that the street doesn't know. So David, rapid fire, why would they go with you and not Franco and Silver Wheat and all the big boys?
Well, the two words, double bump. And what that means is they're getting an immediate premium. We're offering them a premium for the takeout, but also they see the prospect for a significant re-rate within this broader portfolio that we bring to the table. We already had 110 royalties in the portfolio. This brings us to almost 200 royalties on a combined basis. And they recognize there's a lot more leverage in a smaller emerging player like Gold Royalty than there is in, say, selling out to Franco-Nevada or Wheaton Precious Metals. Jimmy Lee, who's a billionaire on the pulp and paper side and the biggest shareholder of Golden Valley and by extension Abitibi, said, I want a double bump. I don't want to cash out. I've got enough money. I want to see the potential for a re-rate. And he believes in the management team and the portfolio. And the management team has collectively over 300 years of experience on the operating side of the business. And that's a key distinguishing feature from the rest of the players in the royalty space. There's been a proliferation of these companies that have come to the market the last couple of years, but they're spreadsheet jockeys. They've never run anything. They don't understand the underlying risk of the business, and they don't get access. They don't have the kind of access we do. We got access to Jimmy Lee through a relationship on the board.
And Eric Sprott, who's your largest shareholder. But here's something that I feel like I'm talking in an echo chamber. And it's funny, some of the richest guys in the business reached out to me to talk about this. Guys like Tom Kaplan, who I kind of knew peripherally, but he reached out to me and we became pretty good friends because of this concept of how risk, political risk, jurisdictional risk is being so mispriced in our market. And what David Garofalo and the Gold Royalty guys just did under everybody's noses is basically picked up the best available royalties in the world in some of the best jurisdictions. So David, let's jump to explain to everybody what this deal is. Why is Marin so excited about it? When you called me up and we sat and talked about this, I got to say, like you said, Marin, we need to talk about something. I'm thinking, okay, what's the transaction? My brain started getting going. And when you walked me through this, I sat and said, wow, like this is truly tier one world-class stuff. So David, let's explain the transaction and the potential here.
Yeah, so it's a share for share exchange, and on a pro forma basis, our shareholders will own 54% of the company and the other shareholders will each own 23%. That's Golden Valley and Abitibi royalties. But what they bring to the table is the royalty on the largest gold mine, operating gold mine in Canada, with significant upside potential. They've been mining for 10 years there from an open pit. They're moving underground. Agnico and Yamana, the two principal operators, are investing $1.7 billion on building an underground mine there. And our royalty jumps to 3% on that underground mine. We don't have the entire ground. It's a bit of a patchwork on the royalty side, but we have access to higher royalties on the underground extension of this deposit. There's 4.5 million ounces of reserves currently in the project, largely in the open pit and some underground. we think there's 7 to 8 million ounces of potential beyond that underground. And the reason I believe that, having operated in Abitibi for many years, I was 12 years CFO of Agnico Eagle during its formative years, when they were building and operating the LaRonde mine for the first time and discovering deeper zones, is you need underground setups in these deposits. They go deep. You can't get underground setups until you start setting up infrastructure for operation. So they're sinking a shaft, $1.7 billion of underground infrastructure they're building right now. That's not only infrastructure for operation, it's infrastructure for exploration. They'll get deeper horizon platforms to drill from. And believe me, this deposit will grow, as every deposit has on this greenstone belt in the Abitibi. It's one of the most prolific gold districts in the world. So this is our gold strike. Gold Strike built Franco-Nevada. Canadian Malartic is our gold strike. It's the foundational asset from which we'll grow our business exponentially.
So to my non-Canadian subscribers, this mine is in Quebec, which is the best jurisdiction in Canada, hands down.
Best in the world. As judged by the Fraser Institute,
Yep.
#1 rated jurisdiction for mineral potential, low political risk, and rational regulatory framework. #1 in the world. #2 is Nevada.
Yeah. And
Guess
then
what?
you look at the power cost, lowest in Canada, Hydro-Quebec. And most importantly, when I was in the green energy space, I'd always talk about cost of capital. The Quebec pension funds like Caisse de Depot, they significantly have a mandate to invest in their companies, and you're really tapping into this market. And here's something, David, that you probably don't know, because I come from the different side of the street. I know some of the biggest fund managers of the other royalty companies, and they have told me that this is an incredible deal. And they've told the other royalty companies, don't be playing around in this box, because we're shareholders of Gold Royalty and we think this is an incredible deal for Gold Royalties. And I was the guy who published where you got the jurisdictional political risk, and you look at what you've done with Nevada and Quebec, your NAV, this now puts Gold Royalty in the big seven, this transaction. We just IPO'd early in the year, and you're already with this transaction over $500 million market cap. Eric Sprott and Jimmy Lee and all the shareholders have locked up at $4.80 a share. But when you and I went for dinner, you said, Marin, this is going up multiples. Tell everyone what you told me.
Yeah, well, look, this map that I put up here just shows you where our assets are. You can see exclusively in the Americas, and I'll demonstrate in a minute. I'll show you another chart. We're entirely focused on precious metals with a small component of copper byproduct. And that's a distinguishing feature. It's a low political risk. It's the chunky resources underlying these assets. These are big, big deposits, and obviously in a big mine in Canadian Malartic. So it's quality and quantity. It's scale in the right jurisdictions, which is extremely important and distinguishes us from our peers. When you look at, and I'll just skip through a few slides here to show you on a pie chart how much of our asset base is in the right jurisdictions. 72% in Quebec and Nevada. And that's not exclusively in Canadian Malartic in Quebec. We have Fenelon, we have Monarch Resources as well. There's actually a portfolio within Quebec. Obviously, Canadian Malartic is going to make up a big chunk of that, but it's diversified within Quebec as well. Nevada is a number of assets there. One, Ren, is an extension of the Gold Strike deposit. I talked about Canadian Malartic being our Gold Strike. Well, we actually have exposure to Gold Strike through Ren on the acquisition of Ely. So you can see how heavily skewed we are to the top two jurisdictions for gold mining in the world, as judged by the Fraser Institute. The number one and number two rated jurisdictions for mineral potential, low political risk, and low regulatory risk as well.
So if you take all the top 10 precious metal royalty companies and streamers, Gold Royalty has the highest exposure to positive swap lines, and the lowest, other than what the assets in Peru and Colombia, which are non-core. You look at the core stuff, nobody comes close to that. So now let's talk about what this transaction means and why Jimmy Lee, who's look, this guy, self-made billionaire, wasn't like his daddy made it his money, he took over the empire. These are self-made guys like Eric Sprott, Jimmy Lee. Why are they taking it? And you mentioned double bump. I'm not a volleyball player, so what does this mean for my portfolio?
Well, again, for the sellers of Golden Valley and Abitibi, it means an immediate premium, which we've offered, and that got them to the table. but it's the prospect for a double bump. And I wanted to demonstrate that by comparing ourselves to the peers. These are all the sub $1 billion market cap royalty players. There's a lot of them in the space right now. There's been too many of them.
Yep.
And that's why we've gone about consolidating to create that scale and create relevance. A lot of these companies are zombies. They can't raise money and they can't deploy capital. Their cost of capital is too high. So they've got a collection of assets, but they can't do anything with them. So scale does matter. And what you see here on a pro forma basis, what our market cap is going to be upon the combination of the three companies, $544 million. That's arithmetic. That does not incorporate a re-rate. Doesn't incorporate the bump in valuation that we expect to achieve, the bump in our multiple as a result of achieving that scale and continually improving the quality of our portfolio and improving our liquidity. This liquidity you see is actually already dated. We're probably double in terms of daily trading value now post the Ely transaction, which we only closed a couple of weeks ago. But look at our royalty portfolio, just on quantum, never mind quality, quantum, we are heads and shoulders above anybody else in the space. So when I look at the Mavericks of the world, I see no reason why we should be trading at that kind of multiple, given the quality of our portfolio, the strength of our balance sheet, pro forma $47 million in cash, no debt. So we've got a lot of firepower to continue to add to this portfolio. So from a qualitative standpoint, there's no reason we can't achieve the kind of valuation Mavericks has with this kind of portfolio, if not beyond that, because we have that cornerstone asset. I would argue that nobody in this peer group has that foundational asset like Canadian Malartic or Ren or any of the other assets that we have.
I will argue this, taking away the big three, Franco-Nevada, Silver, Wheat, and Royal, then you've got a Cisco, which they had the open pit and some of the underground on Malartic also. And Sean Rosen's a good buddy of mine. He's the chairman of that deal. So everyone who should think about this, I'm very close with the chairman and the boss of the other royalty company. And I'm saying, buy this royalty company. Put the two dots together. Then you take Sandstorm. This asset is superior than anything Sandstorm has. And I got a lot of respect for the Sandstorm guys. They're my buddies. Okay. They're good friends of mine. And I'll do business with everyone if it makes sense. And right now, it is time to buy gold royalties. Open disclosure. Like an alligator, I've been sitting there quietly, scooping up stocks. Some days I'm half the volume. You have the ARB funds who are playing this. And also, once you get the size, the passive funds, we haven't even gotten into that. And I've written a lot about how passive management's now greater than active management. So it's algos and that whole field. But now you got GDXJ. You've just cracked that for the first time. So that starts in a couple of, let's say, within a week or so. Moving forward now, what is the process? Because once the street figures this out, this just happened. And once the actual gold funds understand what you're doing, you're the CEO of the world's third largest producer of gold, Gold Corp. You merged it with Newmont. Now it's the world's largest producer of gold. You were the CFO of Yamana, of Agnico Eagle for a decade, which is now the lead producer with Yamana on this asset. You've worked in the Abitibi. Your whole team has been there. So people should sit back and go, wow, look at these guys. They've seriously executed within the first year of existence. What's next, David? And where is the stock going? I want to know, why is this going to be a multiple moving forward?
Yeah, look, I think I'll skip to one more slide, and this is a bit of a logarithmic scale, but demonstrates the potential multiple bump that we expect to get. This is on the right side, the price to net asset value ratio that the larger cap players trade at, typically 2 to 2.5 times. In Franco's case, 3 times net asset value. We're at 1 times. We're just getting started. We only IPO'd in March. People are just getting to know us. We only graduated the GDXJ in April or May. Obviously, there's going to be a rebalancing on that. There'll be significant buying as a result of the Ely transaction closing a couple of weeks ago. As that rebalancing occurs over the next couple of weeks, we'll rebalance again. So we doubled in size doing Ely. We're doubling in size again doing this 3-way merger. And so that means there's going to be a lot of passive buying in the stock as we rise in the indices, in weighting. So that scale begets scale and lowers our cost of capital. So honestly, there's no reason we shouldn't be trading at 2 times net asset value, given the quality of our portfolio and the foundational asset we have in Canadian Malartic.
And most importantly, everyone knows I've been writing about royalty companies. You buy when it's less than NAV. You sell when it's 2.5 times. Sometimes it gets to 3.5. It's the de-risked, low-risk way to make doubles and triples in this market. The reason why gold royalty is trading at less than the NAV of all of its peers, because it's actually not financed by banks. And now what happens next, David? Like, what does it take? 45 days, you've locked up. Let's talk about the lockups here and what can happen from that standpoint. And why would a Jimmy Lee lock up?
Well, again, he saw the potential for a double bump, and it wasn't just a lockup, because there's soft lockups which allow you to get out if somebody comes in with a superior proposal. Jimmy and Rob McEwen at the Abitibi level both signed hard lockups. They are irrevocably tied to us. And as a result, we have over 31% hard lockups on Golden Valley, 65% overall lockups. That 31% means that nobody else really can come in, because you need 2/3 support at the shareholder meeting in November to get a deal consummated and do a plan of arrangement. So we effectively blocked anybody else from coming in. So we have a high probability of execution here, and it's a matter of 6-7 weeks to get to closing and get the corner arrangement approved. And really, then that's a launch pad for us. Once we've crystallized the deal, we'll be marketing the story a lot more aggressively, because from a standing start, we've gone from 0 to almost 200 royalties, and we've got 7 producing, another 8 that are in the development stage. We have a significant upward trajectory in cash flow. This is the best growth story in the space, and we have organic growth through generative models, both in Nevada from the old Ely team that's joined us, in Quebec with Glenn Mullen, who ran Golden Valley. He's been a prolific prospector. We have lots of organic growth, and most recently, we did a small private placement in Prospect Royalty Corporation, run by Tim Young, again, a prolific prospector in his own right. And he's digitized terabytes of exploration information that will generate royalty opportunities for us. That's the cheapest way for us to grow. Find those deposits ourselves, or find those properties, stake them, farm them out, take royalties back. Never spend any significant money on it, and generate those royalties for virtually nothing. We have a pipeline that will keep populating our royalty portfolio for decades to come.
So I know Tim Young really well, uber smart. He stakes some of the best assets in the Athabasca Basin. And like myself, he's very risk conscious. Guys, KRO subscribers watching this, I know many fund managers who their criteria was to invest in royalty companies. And Gold Royalty came out of nowhere. I know them, but they're openly telling me that they're selling Metalla to buy Gold Royalties. You announced this deal at the last week of summer. People are traveling. We have an opportunity to get ahead of all of the market. And I think once you get out there, David, and tell the story, most investors are going to go, wow. And this is going 5, 6, 7, pull back, and then it's going to keep growing with the gold market. David, anything else you want to leave my subscribers with? Because I have not seen a deal like this done by any royalty company in many years. This is a milestone achievement. Congrats on putting it together, and most impressively, getting those hard lockups, because companies much bigger than yourself tried to get those assets and they couldn't get the insiders and the big shareholders to lock up the way you did.
That's extremely important. And to us, it was a prerequisite to do the deal, because we recognized there would be significant interloper risk on this deal, given the quality of the asset, the foundational asset. Believe me, that Franco and Wheaton would give one of their appendages to get this asset. So we recognize if we didn't get the hard lockups and have that irrevocable commitment from these smart people, then it would be very difficult to get this across the finish line. So I think that's the advantage we have here. That's the only reason we've launched, is we have that support, both legal and also from a moral support standpoint. They're very, very much behind what we're trying to do, and they want that double bump. They recognize they're not going to get that in a Franco Nevada. This is a rounding error for Franco.
I want to just leave this one thought for all the KRO subscribers. We are the seed shareholders. $5 was the first price, but we got the Katusa warrant attached, and it's trading and all these benefits that came with being a subscriber. But this is our company. And we got one of the largest CEO, like the former CEOs of one of the largest producers in the world, who believe in the vision. And I backed them, and Amir and the whole team that he's put together. But David, I don't really talk too much about the team that you've built together, but you're talking about the head of Bank of America that you got to come. You look at what John Griffiths to go and follow your vision, and the team that you got. Guys like Warren Gilman, who are some of the smartest, most experienced money managers who manage some of the world's wealthiest people, join the board of this thing. So try to explain some of the background of what we're doing.
It's not just about curating assets. You want to curate the right people as well. And if you look at this board of management, it's impressive. And Ian Telfer, who created Wheaton Precious Metals out of Gold Corp 15 years ago. He's here as a chair of advisory board. He's basically tutoring us on how to pursue the model that was so successful for Wheaton Precious Metals. He's been invaluable to me as an advisor on this. Tim Young, I mentioned earlier on, we're investing in his royalty venture, Prospector Royalty Corp. He's agreed to join our board and put skin in the game as well in this story. Beyond that, you mentioned Warren, but look at the technical expertise on our board. I come from an operating background, over 30 years of developing and operating mines with a variety of companies that became all large cap. Alan Hare, a very prolific mine builder, metallurgical engineer, was my successor at Hud Bay, which I ran for 6 years, where we built over $2 billion in mines, and 3 mines over the 5 or 6 years that I was there. And Alistair Still, Sam Ma, Sam from SSR, Alistair from Gold Corp, prolific mine builders and operators in their own right. We're technically skewed by design. We do bottom-up due diligence. We do a lot of work on the geological model. We assess the quality of the operators, the ESG principles. We understand how operators think because we were operators. We understand the risk inherent in the projects we're putting capital into. So we want to make sure that we appropriately risk price that, and we get an adequate rate of return. We allocate dollars expecting to get double-digit rates of return at a minimum on what we're investing in. And we want to make sure that we build in appropriate premium for risk. That means understanding the risk of operating and developing these mines and making sure that we're pricing the deals appropriately. That starts with technical due diligence. And we have that in spades with the team we've assembled here.
Well, David, I think over the next 45 days, you're going to bring a lot of noise to the market. This is an opportunity for my subscribers who it's wild, the psychology. I've been trying to spend a lot of time explaining the psychology of investing. 3, 4, 5 months ago, incredible amounts of emails. When should we buy gold royalty? Now's that time. This is it. They're getting a world-class asset. This is a tier 1 deposit, number 1 in Canada. David, congrats on this. I'm sure you're going to have a great battle for the next 45 days, and I'm always here if you need anything. Thank you so much for making time.
Thanks for your time.